So what differentiates a social entrepreneur from a traditional entrepreneur? A lot of people are asking that question, so if you don't know, you're not alone. Most people think, hey, they're just the same as every other business. In fact, we know all entrepreneurs are like driving like crazy to be successful, but a social entrepreneur is driving their business to succeed, and they're out to make an intentional difference in the world, okay? So they're growing their business with that explicit business model that can range from a nonprofit through to a for-profit and everything in between. And I could give you lots and lots of examples. The types of investors that are looking to invest are a whole range as well. They can diversify their portfolio from responsible investing through to thematic investing in climate or in health, through to impact first, we might say. And that could be, or even through to venture philanthropy. And there are opportunities in the Canadian market today to provide a range of returns based on what your or an investor's interests may be. And we can see examples on the SVX. Has anyone ever been to the SVX? Write it down. Check it out right now if you can. That's a really breakthrough platform that provides a listing of funds and social ventures that accredited investors can invest in. And Marie's at the back from our Center for Impact Investing. She could answer your questions about the SVX. But there's other products as well. Like at CSI, we raised $6 million in community bonds to purchase 2 buildings. There's a solar share bond in Ontario that you can purchase, a zoo share bond. So regular folks like you and I can come in at $500 to $1,000, and we can earn a pretty competitive return over a period of time. Right through to mainstream investment managers and advisors. We'll hear from David from RBC, but also like an example is BNY Mellon. Just one example of some of the mainstream advisors that are creating solutions in this space. They worked with the MacArthur Family Foundation to create a low-indexed carbon efficiency fund that any accredited or institutional investor could get into. MacArthur put $100 million in to get it started. And after that went to market, we started to see many more index funds come out within the months that followed. So, where has this field where is this field coming from? Seeking solutions that matter is not new. We know from our history of credit unions, the Van City Credit Union in Canada started off with 14 people and $2,500 worth of assets in 1946, and is now at $19 billion or something massive. Across Canada, we have community loan funds that do debt financing. Those are privately raised funds. They're usually pretty small. We also have private equity funds, probably about a dozen or so across the country that are theme-based, from sustainable agriculture like Investigo, Aboriginal businesses like the Kate Fund, and even Arcturn Ventures that focuses on clean tech. And there are specific funds like the FIRA Fund in Quebec that provides flexible financing because they want to see farmers get onto farmland and purchase farms more easily. So there's a range of very traditional investments into social ventures as well as flexible financing, depending